Hello, good afternoon. Welcome to the marketplace. Our top stories this Friday afternoon. Ghana secures $144 million as revenue from crude oil exports for the first quarter of this year. Also coming up, cedi losing ground against major trading currency, the US dollar. How much has the COVID-19 pandemic contributed to that? We would find out. And the Private Enterprise Federation is warning of more layoffs as firms struggle to stay in business as a result of COVID-19 shocks. My name is Darrell Kwao. Thanks for being with us. Details right after the break. Welcome back, everyone. The country secured $144 million as revenue for crude oil exports for the first quarter of this year. This is contained in the Petroleum Receipts and Distribution Report for the first 3 months of this year. George Yafe has more.
$114 million came in the form of taxes and royalties paid by all the firms operating on the country's oil fields. This represents a significant increase over the $67 million secured for the first quarter of 2019. The $114 million came from about 8.5 million barrels of crude oil that was exported for the first quarter of this year. The data from the Ministry of Finance showed that in terms of exports from Ghana's share from the two oil fields, that is TEN and Sankofa, about $118 million was secured from its exports. It also revealed that each barrel of crude was sold between $62 to $63 during the first quarter of this year. Other petroleum receipts like income tax and royalties brought in about $51 million, with Anadaco paying the highest in terms of a corporate tax of $14 million. However, for many, the concern will be whether these earnings can be sustained for the rest of the year, looking at the way prices of crude oil in the international market are declining and its impact on government's expenditure and revenue going forward for this year.
Now, after a rather impressive first quarter, the cedi is losing ground against its major trading currency, the US dollar, and entering the depreciating mode. What's happening and what does the future look like, especially during this period we are battling a pandemic? Joining me with some insight is economist with Databank Research, Courage Mate. Great to have you this afternoon on the marketplace, Courage. Let's begin from the impressive first quarter of the year and explain to us what is contributing to what was contributing then to the city's impressive performance. Hi, Courage, can you hear me?
Hello, Darrell, can you hear me?
Yes, I can hear you loud and clear. So I was asking you to just tell us about
Hi, Darrell.
Yeah.
Can you hear me?
I can hear you. Can you hear me? I don't know if...
So...
all right. Great.
Yeah, so during the first quarter of this year, we had the cedi mounting some strong challenge against the international currencies, and it really appeared to have won the battle significantly when the gains against the major currencies actually hit peak of over 4% as at the end of February. But what we noticed is that from the first week of March, when the oil market entered a price war, there was a collapse in oil price, and foreign investors on our financial market began to exit cedi denominated bonds and our local currency market. Those movements within the financial market triggered currency pressures and then started to erode the gains of the cedi to the year-to-date depreciation that we have today. But I should also put that year-to-date depreciation within the African context, where even though we may have lost 1.4% year-to-date against the dollar interbank, we are about the fourth most resilient currencies within our basket of 15 African currencies. And we are doing better than countries like South Africa, Nigeria, Kenya, and Zambia, Namibia, Botswana. And that is quite strong. You know, if you look at those who have beaten us, like Kenya, like Egypt, who have strong reserves position. So I think, in effect, the corona effect on the cedi would likely play through the financial market rather than the impact it will have on our trade balance and current account position.
Okay, so I see that you tell us that, compared to other countries, we are doing quite well. So is it that we are downplaying the depreciation that we are experiencing at this point?
Not about downplaying, but about doing relative analysis, right? Because if you look at the city's performance year to date, a loss of 1.4%, you want to measure that against a certain standard. One of the standards you want to measure against is your own standard. So at this time last year, what did I do? At this time last year, the city lost over 6% against the US dollar. Same time this period, we've lost 1.5%. Are the losses slower now? Obviously, they are slower. Now measure that against our peers, because we are all confronted with the same global context. So how are their currencies reacting versus the way we are reacting? That can give you an indication of your fundamentals, so that if you don't suffer so much losses, then it is either your fundamentals are absorbing the shock very well, or your
All right, we'll try and get Courage to fix that. Okay, Courage is back. Courage, can you hear me?
I'm sorry, I keep getting calls through.
That's okay, technology. So you are explaining, please go ahead.
Yeah, so I was saying that if you measure our performance against the other African currencies, which face the same context, global context, as we do, it gives you the performance of our currency, and then be able to assess whether it is doing well. Now, it tells you the strength of our fundamentals, and it tells you the robustness of our policy regime. So it is not about trying to downplay it. It is about trying to assess the policy regime we have here and the strength of our fundamentals against those of our peers. And it appears we are holding quite firmly when you do that against our peers.
Okay.
But that is also not to overlook the risk to the outlook. And I must emphasize that there are so much risk to the outlook, particularly from the financial markets.
Yeah, I was going to come to the outlook because, again, we don't know when coronavirus pandemic would be over. And so I guess that right now we are revising our outlook as to how we expect the city to perform throughout this year.
Yeah, so then again, the outlook should be looked at from two broad perspectives. One, fundamentals, and two, the way the financial market will behave irrespective of fundamentals. So now when you look at fundamentals, for instance, you look at our balance of payments account, one of the things we noticed during the first quarter of the year was that our export revenues dropped, obviously because of the lower crude oil prices and cocoa prices and our lower export volumes. But what we noticed is that the strong prices we had for gold helped mitigate the downside pressures from crude oil and the rest. And so the decline in our export revenue was slower or smaller compared to the decline in our import volume. So import bills actually fell, meaning we didn't spend as much on imports. So that led to a widening of our trade surplus compared to the same period last year. Fundamentally, we seem to be doing well because of the offsetting movement in the trade account. And so our current account balance is also still in surplus. But then when you go into the financial market, which is reflected by development within the capital and financial account, there appear to be a decline in the balance on the capital and financial account. And that is because you see portfolio investors moving out of our market intermittently into the USD when they see other risks not related to our fundamentals. And to actually give confidence to these investors, the central bank announced that it has gone into a repo facility worth 1 billion cedis, which will be with us for at least the next 6 months. That is going to add to the already $10 billion of reserve that we have to intervene on the market. So whilst the financial sector poses the most significant risk to depreciation, the central bank has also signaled the intention to protect the city through difficult times, through the reserves they have, spot market interventions, forward market interventions, and the repo facility with the U.S. Federal Reserve.
Yeah, and speak of interventions, what else can the managers do, the managers of the economy, I mean?
Well, I think one of the things that is important also is that the central bank is in the mood where it is prepared to inject liquidity into the system to mitigate the downside pressure on growth, which is very good because that's what you see happening around the world. But another important caution is that we need to know what we are spending the liquidity on. If government takes this, the central bank announced they are going into a $10 billion asset purchase program. Now, should government lay hand on this liquidity should be going into productive sectors of the economy, not unproductive sectors of the economy. They should go into ventures that would stimulate growth, that would generate income, that would be able to buy output on the market. But if it goes into pockets and it doesn't generate output, then there will be more money chasing few goods, and it can become inflationary and can cause depreciation pressures as well. So the increase in liquidity from the central bank, the authorities must ensure that it is channeled into productive sectors and productive activity, so that the response from the supply side of the economy will match the increase in liquidity.
Yeah, and my last question to you would be, because, I mean, whenever we engage economists, we want to know, what are the productive sectors?
Well, first of all, you look at the food basket, and you take example, a key from what happened when we're going into the 3-week lockdown. When people front-loaded demand for food items, you saw the spike in food inflation. There was a shock to food supply. So very quickly, you want the government to spend on food production, moving us towards food sufficiency or self-sufficiency in food production, so that that side of the supply chain can be worked on and support the increase in demand or the potential spike in demand as we go along, when people become apprehensive. And actually, to be very confident, or to put forward some confident commentary, we have the Planting for Food and Jobs program,
right,
which should serve as the basis to expand on the food production side. So I think food production will be the first thing to look at. Once we achieve self-sufficiency in food production, we can then drive up into the value chain.
All right. Thank you very much for your perspective this afternoon. Courage Marty there with DataBank. We appreciate your time with us this afternoon. You're watching The Marketplace. Expect more layoffs in the coming months as firms struggle to stay in business as a result of COVID-19 shocks. That's warning coming from the Chief Executive of the Private Enterprise Federation, Nana Osei-Bonsu. Most businesses have been forced to shut down their operations, whilst others have had to cut workers' salaries to mitigate the impact. Speaking on PM Express, the business edition, Nana Osei-Bonsu said many firms are under pressure and are finding innovative means to survive.
How do businesses operate? You sell a service or a product, you get an income, and out of the income, you pay your taxes, you pay your employees. If you're not selling, you're not creating any income stream. And COVID, when it started, and there was a lockdown, before the lockdown, everybody was scared to their wits. So there's no activity, there's no patronage, there's no income stream. And if you don't have income stream, and you're paying employees, you're paying out of your what? Reserves. And how long is your reserve going to be able to do what needs to be done? So those are the things that the businesses are talking about. And if after 2 months, there's no more income, and maybe not everybody is going to qualify for this package.
The liquidity support, since you don't want us to use a stimulus package.
Yes, liquidity support. Because the package comes with even using that to pay rent and pay services. You can. Because it's like working capital. If not everybody is going to qualify, they say 180 companies. If you don't qualify, what are you going to do? Where are you going to get?
So layoffs are inevitable.
Of course.
Can there be any way out to let people, even stay at home for a while, salary cuts and all the rest? Because you have a feeling that
it got to be an arrangement between the employer and the employees.
You have a feeling that the workers are always an easy way out for the business owners.
To me,
say that go home, stay home.
A business's biggest asset is its employees. So it's not that the employee is the one that can be sacrificed.
And I won't mention the company. There's a company in question that, listen, they were asking their workers to go home. But still, the directors were still having those fat packages still being maintained. You have a director's emolument that could take about 20 workers. And that director is still enjoying that, and you're asking about 50 workers to go home.
George, there's always going to be businesses that are bad business people. There's always
and that situation is a bad business.
It's definitely a bad business because you have employees, you're sacrificing the employees for your single individual benefit. That is untenable. So if a business is serious about maintaining standards, because this thing is going to come and haunt you tomorrow. At the end of the COVID, when you're trying to restructure and recover, those people that you let them go, word of mouth is going to spread that this is not a company you work for. A lot of people wouldn't work for a company without corporate social responsibility. A lot of people would not work for a company that doesn't treat its employees well. So to me, as I said, the best asset of a company is its employees.
Right, now the Ghana Association of Savings and Loans Companies continues to assure customers of a strengthened sector despite the COVID-19 shocks. Executive Secretary Chinubua Kodjiabuachi spoke with my colleague Prince Apia when the association donated medical supplies worth 40,000 Ghana cedis to the Kumasi South Hospital to support the fight against COVID-19.
As the COVID-19 cases in Ghana continue to rise, business activities have been affected as a result, especially the operations of financial institutions in the country, because majority of their clientele are in the informal sector. But leadership of the Ghana National Association of Savings and Loans Companies says this is the time for members to keep upgrading their staff to keep the trust of the few that still do business with them. Executive Secretary Chinubua Kodjiabuachi has been speaking to Love Business.
And what we want to encourage the savings and loans companies is that they should continue to build the capacities of their employees, from the security man at gate, the cleaner, the teller, everybody, because everybody play a critical role. And let us all be each other's keeper. We will continue to support the critical sectors of the economy as expected by the central bank. And we will...
The Bank of Ghana has issued policy measures on liquidity support to the specialized deposit industry. Mr. Chinubua Kodjiabuachi reiterates customers of the savings and loans are assured of a strengthened sector with the central bank support plan.
We encourage the customers to go back to their respective savings and loans and continue to do business with them. We also want to say that we will continue to monitor the space, and that the support by the central bank and the government to the sector, we are so much appreciative of that, and we know that the industry will continue to grow from strength to strength. With the support that the central bank is giving to the industry, the customer is well assured that the industry will continue to grow stronger.
Meanwhile, the association has donated medical supplies worth 40,000 Ghana cedis to the Kumasi South Hospital.
We do get some donations, and the government has also supported us with some PPEs, but these things are what in the health service we call consumables. As in, you use them and they get finished, you either discard them or they are no more useful. The COVID, it doesn't look like it's going to go away anytime soon. So we really appreciate these donations that we've had. It's going to go a long way towards caring for the patients.
It is the third of such gesture by the association to various health facilities since Ghana recorded the first case of COVID-19. Prince Apia reporting.
The Aviation Ministry has drawn out a relief plan for the domestic aviation sector, including waiving rent charges at the airports. Already, domestic airlines are flying at half capacity as they comply with social distancing measures. Sector Minister Joseph Ada explains this new relief package will be added to the tourism relief program yet to be launched.
Waiving the landing charges. Okay, and they're working on other such reliefs for them as well. In fact, there was a meeting yesterday to finalize that, added to what the tourism industry is coordinating for the hospitality sector. I didn't get all the details. Yesterday I was in the meeting, but there are certain practical things that we do see. If you go to the airport now, those concessionaires who rent space and put out their wares and sell to the traveling public, no passengers there, nobody's buying from them. And yet, normally they would have to pay rent. We have waived the rent for them on that as well. So the landing charges are all waived, the rent is waived. Those are immediate reliefs that we've put out to them. We're discussing other details, and we need some approval from the government to be able to do that. So that's what is being collated. I think these are very important for us to share with the public, and as soon as that's done, we'll make it public for everyone to be aware.
Now, government has described as unfortunate Ghana's addition to the list of money laundering and terrorist financing countries. It says it has already, in partnership with several international bodies, taken steps to improve the environment against money laundering. George Rafe has more.
The European Union earlier this month put Ghana on the list of countries with deficiencies in anti-money laundering and counter-terrorism financing framework. This is due to claims by the European Union that the country has strategic deficiencies in anti-money laundering and financing of terrorism. But the Ministry of Finance in a statement noted that it is surprised at the European Union because Ghana over the years had demonstrated strong commitment to strengthen its anti-money laundering and counter-financing terrorism. It argues that this move is coming at a time that the Financial Action Task Force and other relevant international agencies have always acknowledged Ghana's efforts in enhancing its anti-money laundering regime in various platforms that the European Union itself was represented. The Finance Ministry had argued that it is unfortunate that the European Union took this action without any proper engagement with government concerning any shortcomings that needed to be addressed. On the contrary, when Ghana's progress report was being discussed at a recent international meeting in Paris, no adverse comment came from the European Commission. The Ministry of Finance is therefore surprised at the European Commission to mention Ghana as one of the countries that have failed to put in place structures to protect itself from anti-money laundering and terrorism financing.
Government statistician Professor Samuel Kobnenim has advised potential job seekers to disregard rumors of job offerings through social media. According to him, some unscrupulous people are using the name of the statistical service to take monies from job seekers in the name of getting them recruited for the national census. Professor Nim warns the corporates to desist from the practice or face the law when caught.
It's come to the notice of Ghana Statistical Service that some fraudsters are demanding monies from unsuspecting applicants who would want to work with Ghana Statistical Service in different capacities to ensure that we cover the whole country and cover it well in terms of quality data. And some information is on the social media that we have engaged some individuals using mobile money accounts to collect money from prospective, unsuspecting applicants, indicating that they can offer them a job on the census or give them a place of their choice. We want to put on record that Ghana Statistical Service, first of all, has not engaged any individual or agency to collect money from any person in the hope that that person would get a job or that person would place in a district of his or her choice. Ghana Statistical Service does not operate a mobile money account. Ghana Statistical Service is a government institution, and for all those that we engage to offer services for us, we do not take money from them in this regard. What we do is to assess your CVs to identify whether you are better suited to be a supervisor, to be an enumerator, or to help us at the headquarters in terms of consultancy services to ensure that we conduct a smooth and successful 2020 population and housing census. Thank you.
Thank you very much. Yeah.
Well, let's turn to COVID-19 and the support being rendered by corporate institutions. More of them are taking steps to support and resource the Noguchi Memorial Institute for Medical Research. The latest is telecoms giant MTN, which has presented items worth 42,000 cedis to the Medical Research Center, whose services are critical in the fight against COVID-19. There's more in this report.
Presenting the items, Corporate Services Executive of MTN Ghana, Samuel Cranton, said the donation followed a request from the Institute to help support its administrative work for effective and efficient data management.
MTN has been supporting the health sector since the inception of this pandemic. We have supported through zero-rating health sites. We have supported through zero-rating various educational sites, and we continue to support. So when the request came from Noguchi, it wasn't something that was very difficult for us to do.
For his part, the director of the Institute, Professor Abraham Kwabna Anang, thanked MTN Foundation for their timely intervention. He assured Noguchi is in a better position to deliver on their mandate.
Now it means that we are even in a better position to deliver the testing results, which is one of the most important components of it.
Since the outbreak of the pandemic, MTN Foundation has presented 5 million cedis to support the government's efforts in the fight against COVID-19.
And that's the marketplace this afternoon. Thanks for watching, everyone. There's more news on our website, myjoyonline.com/business. We'll have some more business news on Business Live at 5 p.m. Do join us. My name is Darryl Kwao. Thanks for watching.